Hey guys, welcome to another weekly focus and happy 4th of July to all those in the United States. So if you're in the United States and you're celebrating the 4th of July, happy 4th of July to you. Alright guys, so let's start with the trade recap as of last week or as of this week, and I'll show you guys what I was looking at or the trades we took and the management thing from there on. Alright, let's do the trade recap real quick. Alright guys, so we're still looking at gold, and this is the only pair I've really been trading like back to back. I haven't looked at the indices like that. So I'm looking at the indices, but I'm not really taking trades on indices right now. So let's look at this on gold. So if you guys remember, last week I spoke about this initial attempt on gold. So I had a buy attempt on this, which failed. So I got stopped out on this, but that was last week. So I had a reattempt on this buys again. So I was reattempting the buys if you look here, and I took this trade I think on the 29th. So let's look at the time I closed this. I think I closed this on the 27th. So I think 2 days after, and then I reattempted the buys on gold. So if you look at this, so I had the initial attempt was around an area like this. I got stopped out, and once price rejected, so we had a rejection thing. Let's see if I can make this bigger. Perfect. So I had an initial attempt around an area like this, then we had a rejection. So you can see like price took me out right here. So price took me out because I had my stop loss around an area like this. So then we had this rejection, and still looking at this structure, I knew we were still playing within this piece of price action. It was an impulse to the downside correction thing, and price coming here, and then you had this rejection at this point. So I had my entries off of this area, and the intention with this again was just to take prices to the upside. So this was a target thing for me, like that was the initial target right there, but you had price, so there was a possibility for prices to take out this area, and it aligned with this minor psychological level of 3500. So I'm currently sat in this position, and I'll show you guys the management thing further. So I had a scaling attempt. Let's zoom in a little bit bigger. So I had a scaling attempt. So you look at the initial position, so you're looking at this right here. So you had the rejection thing, we had the entries, you had the stop loss, then we had this initial push to the upside. Price came back testing this trend line thing around an area like this. So we had a scaling attempt on this position, and price eventually moved to the upside, just a little bit to the upside. Then we had price stopping me out. So on this scaling position, I'll show you guys, I didn't scale in with 1% because of where price was at the time, and looking at the DXY, it wasn't favorable for me to go in like with 1%. So I went in with 0.5%. So I got stopped out on that scaling position at a minus 0.5%. However, I still have this initial position running. So the initial entry, it's still running currently, and I'm holding this into next week. But the scaling position, I just crashed, like that's minus 0.5% on that position right there. So I'm still holding this position, and my expectations again is just to see prices moving to the upside, taking out those highs, and most likely testing the minor psychological level of 3500. So that's it right there for the trade recap. Let's look at the DXY, and it's very interesting when you look at what the DXY is doing currently. So we'll look at the DXY, and then we'll look at other pairs. Alright guys. Alright guys, so let's start with the DXY. And again, if you've been following me for some time now, you must have seen me using multiple time frames. And the important thing about multiple time frames is it gives you a bigger perspective of what price is actually doing. And you can scale into lower time frames, and you can scale it, and you can move to higher time frames just to get a better picture of what the big boys are trying to do. So when you look at my chart right here, I like us to start again on the monthly time frame. So let's bring this up. Perfect. So last week I remember talking about this piece of price action right here. So we had this monthly candle, I think from the month of June. We had an impulsive break to the downside, and I had this trend line. So there's a couple of principles we're using. You have a trend line, you have a psychological level thing. So we had this monthly candle, June closed impulsively to the downside. So I was sat here looking at this now. Going off of the principle of psychological levels, we're still trading below 100. So you have this psychological level right here, it's 100. Going up of the principle of psychological levels, if price has to keep moving to the downside, because we've gone through 100, where is price most likely going to gravitate to? It has to be 90. But there's a couple of things that can happen because price moves in waves. You're having this impulse and corrections, So there's still a possibility we'll see prices coming to the upside, testing this psychological level of 100, and not just testing the psychological level, but you could see price testing the trend line as well. And that's another simple concept. So if you have price moving to the upside and you see this violation, price likes testing these areas right here, and then you might see prices moving again to the downside. So looking at it from the monthly time frame, there's a couple of things you can pick from this time frame. So first of all, the bigger picture thing is, if price is moving to the downside, where is price most likely going to gravitate to? And if we're taking prices to the downside, the next psychological level is 90. Now, is there any trend line that's going to prevent this price from moving to the downside? Because we're looking at this right here, and you have this trend line right here. So this trend line has been violated. If we was inside an area like this, so let's say if price was still at this point and price goes below this area, which it did actually, and you're looking at a retest of this area and you're expecting prices to drop to the downside, you start getting a little bit let's say worried about this trend line, because price could bounce off of this pivot point. So you're looking at the pivot point right here and you're expecting the same thing from an area like this to take prices to the upside. So now that we've broken out of this trend line, it doesn't mean price is just going to drop down like crazily, because once you have a violation of a trend line, it doesn't mean sellers are just dominating the market. Sometimes it's an extended pullback or a complex pullback of prices to resume in its initial direction, which in this case you're looking at this piece right here to this piece right here. So that's an impulsive move to the upside, and everything you see coming to the downside can simply be a correction day. So it's very important you look at prices this way and just understanding what price is trying to do. So that's what I'm looking at on the monthly time frame. Now, trend line has been taken off. In terms of psychological levels, we headed all the way to 90. Now, if we step down to lower time frames, or before we step down to lower time frames, it's also important you point out the possibility of what price can do. I mentioned this already. Once you break out of a psychological level, price likes to test or come back to test this area, then you might see a movement to the downside, or you see price breaking out and you see something like this and you see a further movement again to the upside. So those are all possibilities from a bigger time frame thing. So let's look at the weekly time frame. So if you step down to the weekly time frame, and this is what we're looking at currently on the weekly time frame. If I can point out something, so let's go back to the monthly. Now, once you're looking at corrections, it's very important you use channels or you use trend lines. So for example, you look at this impulsive move right here, that's on the monthly time frame. It's an impulsive move to the upside. Now, price has taken out this area and price has broken out of this trend line. It doesn't mean price is gonna sell all the way to 90,000. So price coming all the way to 90,000 is just a possibility. Now, you need to ask yourself, are there trend lines that can prevent this price from getting all the way to 90,000? And if you bring in a simple channel thing, so let's do something like this. So if you put a channel right here and you step to an area like this right here. So give me a second and I'll take this off other time frames and I'll make it visible as well right here. Perfect. So if you look at this piece of price action, it's a very simple way of looking at prices using channels, and channels are just trend lines, by the way. So you're looking at this impulsive move to the upside. It's a correction thing right here. Buyers had an attempt from an area like this. There was an inability for prices to take out these highs. So once you start connecting the dots with the channels, it tells you where price is most likely going to bounce off of. So, and that's why I'm saying an area like this is a very critical point. Why? Because price is very close to this trend line right here, which is a counter trend line. to this initial push to the upside, and there's a high possibility we might get, let's say, another weekly candle that comes to the downside, giving you a perfect touch of this area, and you see a rejection and price moving again to the upside, pulling back, moving to the upside, pulling back, coming to areas like this. So that's a very big possibility right there. So if you clean this, looking at this on the monthly time frame, I'm going to keep this on the monthly time frame. So that's on the monthly time frame. Perfect. So that's something you can look at, and it gives you this understanding as to what price is most likely going to do. So if you remember, so let's hide this and I'll explain this one more time. So you have an impulse, you have a correction, you have a violation of this area. Going off of the principle of psychological levels, you're expecting prices to get all the way to like 90,000. Now, price is not just, let's say price is not going to drop to 90 like this. It's not going to drop. It's going to face some difficulties. And if you bring in this piece of price action right here, or sorry, if you bring in this channel thing, it tells you where price is most likely going to face challenges, which is around an area like this. So you should expect prices to bounce off of areas like this, again rejecting and moving to the upside. So that's something to pay attention to, and that's on the monthly time frame. So let's step down to the weekly and I'll show you guys what we're looking at. So as prices as prices moving to the downside on the monthly time frame, you have your area thing. So you're having this piece and you're having this piece right here. So we're still expecting prices to come to the downside. Now on the weekly time frame, prices drop into the downside. So we had a rejection off of this area, 110, took prices all the way to 100, and we're expecting prices to get to 90. But if you put this channel thing, it tells you what price is most likely going to reject from. We should expect buyers stepping in. So around an area like this right here, and I'll look maybe on lower time frames, you might see minor psychological levels. I'll give you higher confidence around an area like this. But as prices moving to the downside on the weekly time frame, let's zoom in and see what price is actually doing. So perfect. So this is what we're looking on the weekly time frame. Price is currently below 100. How is price moving? Where is price most likely going to gravitate to? It's an impulse correction, impulse correction, impulse correction. You had a correction to this area, and we've taken out this piece right here. Now when you look at the price action, it tells you a lot looking at this. So you had a rejection at this area, you had a rejection, you had an impulsive move, rejection, impulsive move, minor correction, impulsive move, correction, but we've been struggling moving to the downside. So this already tells you, if you look again on the monthly time frame, this piece right here, this area right here might be an area to pay attention to, because you might see prices rejecting off of this area and moving again to the upside. So that's something to pay attention to. So we'll clean this, step back to the weekly time frame. So now the market flow is the next thing I like looking at, and market flow simply says, oh, it's a concept I use all the time. So if I have a bigger picture of price action, for example, you have price moving to the downside, price reacting from areas like this, then you have this minor structure thing within this area. So while you're looking at this bigger picture thing, it's an impulse, it's a correction, and you're expecting another impulsive move to the downside. So if you look at the market flow theory thing, you just want to go within the bigger picture and look at this correction within this area like this. So we can step down to the daily time frame and see what's actually happening within this piece of price action. So this right here, so on the daily time frame, you have an impulse, you have a correction, you have an impulse, you have a correction, you have an impulse. So looking at this on the daily time frame, going off of these trend lines, you are expecting a correction to come in and a movement again to the downside. So basically that's what you're looking at. It's an impulse to the downside. You get an impulse to the downside, you get a correction, you get another impulse again to the downside, you get a correction, you get an impulse to the downside, and you're expecting a correction to come in. So price action, impulse, correction, impulse, correction, impulse, correction, and that's what I'm expecting on the DXY. So there's still a possibility. Now looking at this on the daily time frame, let's look at another thing that makes lots of sense. So in as much as you're expecting the DXY to pull back to an area like this, there's certain times when it's not going to pull back to those areas. And I'll show you a quick example. You look at this impulsive move right here, and normally you're expecting prices to come to an area like this, but that was not the case. So price did pull back just to an area like this. Now, if you scale down to lower time frames, there's certain setups you can look at that tells you if price is actually going to get back to the next trend line thing, or if it's going to hold midway and then drop again to the downside. So you see price halting around an area like this, and then you had to push to the downside. So you've seen this piece right here, and you've seen price coming. There is still a possibility price can hold around an area like this, and it drops again to the downside. So that's just one possibility. And again, it doesn't stop prices from doing something like this to an area like this. So those are all possibilities. Now, once we come into next week, we need to give price, let's say, a couple of hours to see what price is actually trying to do, and then you can map it from areas like that. Now, that's on the daily time frame. Let's step down to the 8-hour time frame. There's not a lot I can show you guys on the 8-hour time frame. It's just the same thing. So you had an impulse right here, you had this correction thing right here, inability, and the movement to the downside. I'm looking at the same thing, impulsive move to the downside, looking at this push. If we see an inability around this area, then we're expecting prices to drop to the downside. If price keeps moving to the upside, then we're expecting sellers to come in around an area like this, taking prices again to the downside. So the 4-hour time frame, perfect. On the 4-hour time frame, now you're expecting prices to pull back to the upside, giving you higher highs and higher lows, similar piece of price action, higher highs, higher lows. So that's what I'm expecting on the DXY. But at the same time, I know there's a possibility we might flat out around an area like this and drop again to the downside. So going off of this, then you can look at this, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And I'll show you guys what I'm looking at on lower time frames. I think on the hourly time frame, I brought in a couple of levels on the hourly time frame because I'm currently managing the position on gold on the hourly time frame. So because I'm managing my position on gold on the hourly time frame, I'm looking at this piece right here, and this is very important. I don't like looking at the hourly or forecasting on the hourly time frame because I use it for entries, management, and stuff like that. So show you guys what I'm looking at currently. So you're looking at this piece right here. Let's do this. So you're looking at this impulsive movement to the downside, and you're seeing prices coming back to the upside. So normally the anticipation is for prices to keep moving to the upside to an area like this. You get a rejection and you get a drop to the downside. So that's what we're looking at. That's the anticipation thing. But when you look at what price is doing currently, it's an impulse correction within this area. So if you put a trend line thing, you're just looking at this movement thing to the upside. So you're expecting prices to bounce off of this psychological level. It's a minor psychological level, by the way, 96,500. You have a trend line thing right here. So you're expecting an impulsive movement to the upside because that confluence, that area right there, it's massive on this time frame, on the hourly time frame. And stepping down to like the 15-minute, 5-minute time frame, you should expect buyers to come in from an area like this, taking prices impulsively to the upside. Maybe to an area like this, you get a pullback and you see price moving to the upside. So coming into next week, I'll watch this closely because if there's an inability for prices to move to the upside off of this area right here, if there's an inability for prices to move to the upside and you get prices failing, then you could see the DXY dropping again to the downside. So that's one possibility right there. And this is just a management thing we're talking about on this lower time frame, like the hourly time frame. But if you're looking at it from the monthly time frame, then the weekly time frame, it's a different story because you're looking at this piece right here, and there's a big possibility for prices to bounce off of this area. We might get another push, another weekly candle to an area like this, then you get that rejection and you see prices moving again to the upside. Those are all possibilities. Now, another thing I didn't point out on the monthly time frame, because we're having this impulsive movement to the downside, you might see prices bouncing off of this area and there's an inability for prices to go to the upside, and you see this struggle for prices to drop, then you get another movement again to the upside. Now, those are all plays we look at. So That's another thing to point out on the DXY right there. So I'm taking so much time on the DXY because if you understand the moves on the DXY, it makes it easy for you to hold your positions a little bit longer, and it makes it easy for you to manage your position. So I'll keep this again on the hourly time frame right here. So here's the time frame I'm using for entries and for trade management and everything. So this is what we're looking at currently on the DXY. So I'll keep this on the chart, and if this starts moving again to the upside, so let's say this area holds and you see price moving to the upside, then we're taking out this area, and the next area we're approaching has to be 9700. So this psychological level right here, 9700, we could see prices get into an area like this. So coming into next week, you want to watch the DXY. You have a game plan already, and in a belief of prices to drop below this area, and in a belief of prices to drop below this area, then we're expecting prices to go to the upside. But if there's an inner belief of prices to move to the upside and it flats out around an area like this, then you should expect prices to drop, giving you this test and a movement to the downside. The next area we're expecting prices to get to is 96 flat. So that's my analysis right there on the DXY. So let's look at the next pair, and that's the gold. Very beautiful one to look at. Alright guys, so let's look at gold. I've taken lots of time on the DXY, and sometimes when explaining I just get carried away because I'm saying certain things and I like to point it out. So here is gold and all time frames again, multiple time frames, daily, 8 hours, 4 hours on the hourly. Let's start on the daily time frame and let's look at what's happening currently. So last week we saw prices drop into the downside. I had two attempts before getting this buys. The first one was a loss, and then the second one is finally playing out currently, and we're having a push to the upside. But looking at this currently, what's the story you're looking at on gold like right now? What's the story like? What is the pair telling you? Where is price at? Where is price most likely going to gravitate to? Are there psychological levels you can use? Are there trend lines you can look at? So the bigger picture thing on gold again, so because we're coming off of this area of 3000, we're expecting prices to gravitate towards the next psychological level, which is 4000. Now, if you remember what we was talking about on the DXY, you need to be really careful because there's a possibility you might see this guy dropping. So the trend line delivery, you might see this guy dropping to the downside, because if you look at the monthly time frame for the DXY, you see where the counter trend line thing might get those rejections from. You might see those impulsive moves again to the upside on the DXY, and if that happens, for price to deliver to the upper channel thing on the DXY on the monthly time frame, you might see gold then dropping, giving you this delivery to this area right here. So that's something you can look at, just a bigger picture thing. Now let's zoom in on this piece of price action. So you have this trend line which we was talking about, and coming into this week, I mentioned this already, I was expecting prices again to pull back into this area, get a rejection around an area like this, and for us to take out this piece, for us to take out this highs, minor psychological level of 3500, and for prices to keep moving all the way to like 4000. Now we're facing a little bit of a rejection around this trend line thing. So we had a push to the upside right here, and the counter move again from the sellers. I think that was during NFP thing. Now looking at this, what is price most likely going to do? So we're still playing in this buyer's territory because there's been this impulsive move to the upside, and everything you see right here, this consolidation, depending on how you want to look at it, what you're looking at right here for me is just a correction thing. So there's still a possibility for prices to drop to the downside to areas like this, and then you see prices moving again to the upside. But this on the daily time frame, so we've had a breach of this trend line, and on this time frame it's difficult for you to tell because now you had this push right here, you had a rejection, you had price coming back to an area like this. So there's a possibility this is just testing an area like this, and for us to see prices coming back to the downside, taking out this area, moving to the upside, or you get a further push again to the downside, then a movement to the upside. So that's on the daily time frame. It's difficult for you to see what price is actually doing. If you step down to the 8-hour time frame, or before you step down to the 8-hour time frame, going off of the market flow thing, you've seen this impulsive move right here, and you're having a correction thing. right here. So on impulse correction, then you're expecting prices again to move to the upside. So everything coming here. So what you're looking at right here, I was looking at this as a correction thing and expecting prices to take out areas like this. So if you step down to the 8-hour time frame, and let's look at this piece right now on the 8-hour time frame. So looking at this, it's been an impulse to the upside, then you're having a correction coming to this area. So if price rejected from this area and the buyers were really interested in taking this prices to the upside, we should be taking out these highs. We should be testing this highs right here. Aligns perfectly with this minor psychological level, and we should see prices moving again to the upside. But then let's break this from the 8-hour time frame and see what price is actually trying to do. So we had an impulsive move to the upside. It was an impulse. We had a correction pivot point around an area like this. So we're expecting prices again to move to the upside. Now you look at this piece right here. There's a counter trend line thing right here, and we had price breaking out of this area, giving us a test right here. And that's where I had the scaling, I had the scaling position around an area like this. I'll make this bigger so we'll see what I'm talking about right here. So perfect. So we had an impulse thing. We had this rejection around this area, pivot point, counter trend line taken out. I had my scaling around this area. NFP came in, took me out on those scaling positions. But when you look at this, we're still playing off of this area. Now, what are the possibilities off of this area? If you understand the way we've been looking at prices, it's an impulse, it's a correction, and a further move to the upside. Or you get an impulse, you get a correction, and you get a movement again to the upside. So looking at this piece right here, let's see if I can show you guys. All right, cool. Impulse, correction, movement to the upside. 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 So when you do the market flow thing, it's gonna help you understand certain things. So impulse, correction, you're expecting a movement to the upside. We've taken out this piece right here. You can apply the same principle. It's an impulse, so you could expect the correction to come in and the movement to the upside. So you could expect the correction and the movement to the upside. I hope this makes sense, but as you're moving down to lower time frames, you start understanding what price is most likely gonna do. Now, going off of this again, it's an impulse, it's a correction, it's an impulse. You could see a correction coming in to an area like this. So something like this, you could see price doing this on inability, then you see this price moving again to the upside. So these are all possibilities right there, and it's very important you look at prices this way because it helps you anticipate the moves easily. So I had an entry around an area like this. So if price starts pulling to the downside, and if we've not taken out this area, I'm still gonna hold my positions on gold and see how this pulls back to an area like this. It might even come back to my entry position, and if price gets to an area like this, then I'm looking for possible scalings again to take prices to the upside. So that's what we're looking at right there. Now that's on the 8-hour time frame. If you step down to the 4-hour time frame, and let's say the DXY starts moving aggressively to the downside, I think I can show you guys. Perfect. So if the DXY finds it difficult to buy off of this area and we breach like this and start moving again to the downside, if we start trading below 96,500, this psychological level, if we drop again to the downside, then there's nothing stopping us from getting to 96 flat. So based off of this piece of price action, you can look at gold at the same time. So hold on, let's see. So let's put this right here. So it's an impulse, it's a correction, and you could expect prices to drop again to the downside. So at the same time, you're looking at gold and you're looking at similar piece of price action. It's an impulse, it's a correction, and you're expecting prices to move to the upside. So this is what I'm looking at currently. Now, because we're still playing off of this piece right here. So we had a reaction thing here, we've had a reaction thing here, but the same thing, counter trend line, and we're just bouncing off of those areas. So first thing, if this has to move to the upside, then this should be a pivot point, taking out these highs, and that's why I have my timer around an area like this, because if price starts moving to the upside, the first area I want us to take out is this piece right here. If we can clear this guy off, if we take out this guy, then you get pullbacks and you're expecting prices to move to the upside. However, you need to be very careful as well, because if you break out of this piece right here, so there's a trend line thing I'm just looking at right here. So you had this rejection, pullback and stuff like this. If you see price trading outside, then you're looking at this as a deeper pullback. I'm going to clean this so you can see. So if this price breaks out of this area, then you're expecting prices to sell to the downside. Impulse, correction, impulse. So we could see prices coming back to an area like this. If there's an inability of prices to go through this area, you're expecting those sales to come in to the downside. So you're expecting a movement to the downside, and you're looking at this piece right here. You could see prices coming all the way to an area like this. Then we're looking for buying opportunities again to the upside. So it's just the anticipation thing right there. So currently we'll stay holding around this area, and let's see, I think on the hourly, perfect. So on the hourly time frame, like there's nothing I can show you guys on the hourly time frame. I'll just stay on the 4-hour time frame. So that's a game plan for me right there on the 4-hour time frame. So it's an impulse, it's a correction, same thing, it's an impulse, it's a correction. So depending on how price plays out of this area, if we break, then I'm expecting a deeper pullback thing. But if we keep respecting this area, I want to see price taking out this piece and moving again to the upside. So we'll look at the DXY coming into next week, and we'll pay attention to what's happening on gold, and we'll take it from there. I still have my position open on gold, and I haven't moved my stops to break even. I'm still watching it, and if I don't like the price action, I might close it. So it just depends on what price does coming into next week. But that's my analysis right there. So we're just mapping this out and seeing if we can take prices again to the upside. Alright guys, so that's it for the DXY and gold. Let's look at the indices, and we'll go really quick on the indices because I'm not trading those actively right now. Alright guys, so starting with the S&P 500, I'm expecting some sales to come in. So next week, I'm expecting sales on the S&P, NAS and US30. And I'll show you guys why I'm expecting sales on this pairs. So let's do the weekly all the way to the downside. So first thing, we've taken out these highs and we've made new highs on the S&P 500. So how does price move? If you take out these highs, you're expecting a pullback. So you're seeing it here, it's an impulse, it's a correction, impulse, correction. So there's been an impulse and we're expecting a correction. So going off of this on the weekly time frame, where is price most likely going to gravitate to? There is no doubt we're taking prices all the way to 7,000. The S&P 500 is eventually going to get to 7,000, but the movement to the upside is going to come with some speed breaks. So you should expect prices to pull back, sometimes giving you a complex pullback before you see prices moving to the upside. So that's it on the weekly time frame. If price starts pulling back, then you're looking at this area right here. That's a psychological level of 6,000. That should be the first area you're expecting prices to face some difficulties. So if you have a pullback to an area like this, you're expecting difficulties around an area like this, and maybe a push again to the upside. Now, how price reacts off of this area is something that's gonna trouble you later on. But for now, it's very important you look at the possibility of prices pulling back to this area. So you're looking for sales coming back to an area like this. Then you decide on what to do once price gets to this area. Because if it goes deeper, then you're looking at this. But if it fails to go through this area, you're taking prices to the upside. So that's on the weekly time frame. Let's do the daily real quick. So I was looking at this last week, and this is still very interesting. So first thing, you're looking at this you're looking at this channel thing right here. So it was a push, and the market flow just tells you this is what price is doing currently, and we've had this push to the upside. So we're expecting prices to come back to this trend line. So on the daily time frame, let's zoom in to an area like this. So there's still room for the S&P 500 to drop to the downside to an area like this. So there's still room for it to drop to this area. Now I'm looking at the bigger picture thing on the S&P 500. I'm looking at a bigger drop on the S&P 500. Now here is my take on this piece. Because we're looking at this as a trend line, if price comes back to an area like this and there's a rejection here from the buyers, then we should see prices moving to the upside, which is not what I'm expecting on the S&P 500, by the way. So I'm expecting the S&P 500, I'm expecting prices to drop in ability around this area, and for us to see a further drop again to the downside, coinciding with this psychological level of 6,000, and at the same time pulling back to this trend line right here. This move on the S&P 500, if it holds through, is the same move I'm looking at on NAS100. Now, the move on NAS100 even looks better than what you're looking on the S&P 500, but that's what I'm looking at. My bias on the S&P 500, NAS, and the other pairs, I don't know, but for some reason, the price action tells me I'm expecting sales, and that's my bias. So I'm not going to change it. So I looked at it this morning. I'm like, nah, I'm expecting sales on this pair. I might be wrong, by the way. So you might come into next week and price will start buying again aggressively again. So price is going to do what it wants to do, but I'm expecting sales on the S&P 500, push to the downside, inability for prices to move above this area. I'm expecting prices to drop to this psychological level 6,000, coinciding with this piece of price action right here. Oh, sorry. Where was I at? Sorry. So I was on the S&P. Yeah. So I'm expecting prices to drop all the way to like 6,000. So that's what we're looking at. So let's look at this on the 8-hour time frame and start mapping this out. So that's it right there. It's just the same thing. Oh, I keep flipping this. Sorry. Let's see. Yeah, perfect. So we have in this piece right here, and you're looking at this area as price is moving to the upside. There's a break, there's a pullback, there's a break. So depending on how price reacts off of this area, if there's an inability of prices to move again to the upside, you should expect a drop to the downside. 6,000 is the area I'm paying attention to. So let's look at this on the 4-hour time frame. By the way, I don't like this setup on the S&P 500. I'd rather go with the one that's happening on NAS100, and I'll show you guys why. Because when you look at this move on the S&P 500, the reason is we're playing off of this area right here. So you had this bridge right here and price started trading outside, but when you look at the price action, it's been like this difficulty to move to the upside. Yes, there's been an impulsive move, but you're having a counter movement again from the sellers. If the sellers can drop prices back into this area, you want a test of this trend line, and you're looking for sales again to the downside. That's my take right there on the S&P 500. Let's see the hourly. Now I'm not going down to the hourly, but we can stick to, let's say, the 8-hour time frame and the daily time frame. That's my analysis on the S&P 500. So the bigger picture thing is for prices to get to like 7,000, but temporarily I'm expecting a drop on the S&P back to this area right here, 6,000. So that's the first area I'm expecting prices to get to on the S&P 500. So yeah, I want to show you guys what's happening on the other pair, which is NAS100, because that looks better compared to what we're looking on the S&P 500. All right, let's look at NAS. All right, guys, so here's NAS100, and I'm going to compare this with what's happening on the S&P 500. So let's pull this up. Start again from the weekly time frame. What is price and where is price most likely going to gravitate to? So you have this impulse correction. You have your psychological level 20,000. The next psychological level we're looking at in the community is 25,000. Now, once you take out highs, you're always expecting the pullback to come in. So we're expecting the pullback to come in, some kind of a complex pullback even, then a continuation again to the upside. So bigger picture thing, impulse correction, where is price most likely going to move to? 25,000. So that's what you're looking on the weekly time frame. If you step down to the daily, now we had this, and on the daily time frame I was looking at this minor structure thing right here. Again, it's just a market flow theory thing. It's not complex, it's not rocket science, by the way. So you see price moving to the upside, and it's giving you this structure right here. So what you're expecting prices to come back to an area like this, and you see what I'm saying are rather go with what's happening on NAS compared to the S&P 500, because once we had a breach of this area, if you look at this on the S&P 500, it was an impulsive break to the upside, then a pullback. Now on NAS100, you had price taking out this area, but it's not been an impulsive break to the upside. It's been like this shallow movement thing. It's an impulse, there's a struggle, there's another impulse, and price seems to be coming back into this area. So the same thing I was talking about on the S&P 500, if we see price pulling back into this area, you're looking for a test and taking prices to the downside. On NAS100 is the same thing we're looking at. So you had this push, you had a rejection to the downside right here. You had buyers stepping in again, and you should expect sellers to reject again. And this game is they're gonna play this game till there's a resolution thing. So you should expect something like this inability, like the struggle, like just the struggle within this area for prices to move to the upside. Once you see something like this, you want to take those prices again to the downside. So personally, I would say wait for prices to come back inability, then you take prices to the downside. So that's what I'm looking at on NAS100. That's on the daily. Let's look at this on the 8-hour time frame. So look at this story on the 8-hour time frame. So we're coming off of this piece right here. It's an impulse, like crazy impulse thing, correction. We took out these highs and prices coming back within this area. So how is price going to react off of this area? If we try taking prices again to the upside and there's still this inability, so price might even brush out of this area, but if price keeps dropping back within this area thing right here, then you're looking for sales. So then you're looking for sales, you're looking for something like this on NAS100. So trust me, you can get, let's say 1:5 off of this, and there's even a possibility you can take it lower. But so if you get proper entries on this pair, and even if you're playing to an area like this, that's a 1:6. So I'd rather go what's happening on NAS100 compared to the S&P. So that's on the 8-hour time frame. 4-hour time frame, same thing. So you're just seeing this inability for price to move to the upside, and you want to see it happening again, then you're looking for those sells on NAS100. So that's my analysis right there. The S&P thing and NAS, it looks the same to me. So it's like a mirror image thing. So that's it right there for S&P and NAS100. If I had to pick one, I'd rather go with NAS, because I like the difficulty around this area. I just like the difficulty compared to the S&P. All right, guys, so that's it. We'll look at this, and we'll look at this next week and see what happens. And again, I might be completely wrong, but my bias on this pairs is just for the sells on the S&P and NAS. And let's look at the next one, the last one, by the way. All right, guys, so let's look at US30. Now, if you consider these indices as a family, and you think the S&P, NAS, and US30, you look at them as siblings. When you compare US30 to NAS and the S&P 500, this guy is just like, it's like the little brother or the little sister that's just doing something completely different. You look at the rejection thing happening on NAS100, it looks good. It looks similar to what's happening on the S&P 500. Now, when you bring in this guy, his moves are always crazy. So let's start on the weekly right here. So with US30, here's what I was looking at. I don't even like comparing US30 with NAS on the S&P because it's a little bit crazy sometimes. So you're looking at this piece right here. Perfect. So you had an impulse thing, you had a correction, you had an impulse, you had a correction. We've had another impulse, and there's been an inability to take out these highs. So whereas on the other pairs, on the S&P, we're coming off of these areas where we've taken out those previous highs, and the same thing on NAS. and the same thing on the S&P. So NAS, we've taken out those previous highs, we're expecting a pullback. The S&P, let me show you guys, put this on the daily time frame. So on the S&P, we've taken out this area, we're expecting a pullback. You look at NAS100, put this on the daily as well. Perfect. So I think, yeah, we've taken out these highs. We're expecting a pullback. So I'll put this again on the 4-hour time frame, because here's what we're looking at this, or we're anticipating the sells. And on the S&P 500, I put this on, you know what, let's put this on the 8-hour time frame, and we're expecting sales on this pair as well. So let's put something like this on the S&P 500. So, and you can just take prices all the way to like 6,000, you know, if this happens. So keep this there. That's a 1:4 thing. So S&P now, we're expecting prices to drop to the downside. Now it's very important you look at this and look at US30 as well, because if you're playing off of this channel thing right here, for some reason the S&P 500, they've taken out the previous highs, NAS100 has taken out the previous highs, but this guy is finding it difficult to take out those previous highs, and that's where everything becomes really interesting, because you had this impulsive move right here, the same thing on the S&P 500, the same thing on NAS, but for some reason US30 hasn't taken out this high. So I'm expecting a push to the downside on US30 as well. It would have been perfect if we had prices testing this area, but let's play with what we haven't, or what you've seen currently. So it's this market flow thing right here, push to the downside, and a push right here, inability for prices to take out those highs, and I'm expecting a drop to the downside back to this piece right here. So that's what I'm expecting on US30 coming into next week. Let's look at this on the daily and see what price is doing currently. So if you look at the channel thing I was looking at on those other pairs, the S&P, NAS, it looks really good. US30 is the only one that says, no, I'm just going to do something completely different. But I'm still expecting sales. So on US30, if we're expecting sales on US30, where is price most likely going to drop to? You could see prices dropping again to an area like this. So just testing this area. But a bigger picture thing and a long-term thing for me is to see this guy drop into the downside to an area like this, to like 40,000. Now this might be difficult, because when you look at this reaction on NAS, you're expecting a drop. You look at the S&P, you're expecting a drop. And I said this already, if you look at these guys as siblings, US30 is always going to do something slightly different, or the guy just likes to go overboard with the way he plays out. So look at this on US30, we're expecting a drop. On those other pairs, we're expecting deeper drops, but on US30 it might just be a minor drop thing. So that's on the daily time frame. Let's look at the 8-hour time frame. It's the same thing, we're still expecting the drop. 4-hour time frame, we're expecting a drop. So you're having this piece right here as a trend line thing. So once you see a violation, you should expect a deeper pullback, maybe to an area like this, and then a push again to the upside. So that's what I'm looking at on these indices. I think US30 is, at least if I had to trade indices, I'd rather go what's happening on NAS100. And I just want to see this inability for prices to move to the upside thing. Then we can take prices to the downside. All right, guys, so that's it for the analysis today. And again, be patient, stay consistent, and make sure you praying every day you come into the markets to take positions. All right, guys, that's it for me, and see you during the next one. Bye for now.